Hey there, future crypto millionaire. Are you new to crypto and wondering how people make risk-free profits using arbitrage trading? Well, you're in the right place. In this beginner-friendly video, I'll break it down step by step. No jargon, no fluff. Let's dive in. So first, what exactly is crypto arbitrage? Imagine this. Bitcoin is selling for $30,000 on one exchange, but $3,200 on another. If you buy on the first exchange and sell on the second, boom, you just made $200 profit. That's arbitrage. Simple, right? It's like buying water bottles in one city for $1 and selling them in another for $1.50. Same product, different markets, instant profit. There are a few main types of crypto arbitrage. Spatial arbitrage. This is what we just talked about. Buying on one exchange, selling on another. Binance, Coinbase, Qcoin. Prices vary slightly across them. Triangular arbitrage. This happens on one exchange. You trade between three coins, like BTC to ETH to USDT and back to BTC, and profit from the rate differences. Statistical arbitrage. This one uses bots and algorithms to exploit short-term price patterns. More complex but powerful if you've got the tools. Step 1. Choose your exchanges. Create accounts on at least 2 major exchanges. Popular choices: Binance, Kraken, Coinbase, Bitfinex. Step 2. Fund your accounts. Deposit USDT, BTC, or ETH. You'll need funds in both accounts to avoid transfer delays. Step 3. Use arbitrage tools or bots. You can start manually, but tools like CoinMarketCap arbitrage trackers or bots like CryptoHopper or ArbiSmart make life easier. Step 4. Monitor and act. Quickly, crypto prices change in seconds. You've got to be fast. Set alerts or use automation. Let's be real. Arbitrage isn't 100% risk-free. Network delays, withdrawal fees, or price slippage can eat your profits. Some exchanges might block quick transfers. You also need to account for KYC, withdrawal limits, and transaction times. So, always test with small amounts first. Stick to high-volume coins for faster trades. Start with centralized exchanges. Consider using stablecoins to avoid volatility. Track your trades. Even $5 gains add up fast. And that's it. A crash course in crypto arbitrage. Whether you're just starting or testing waters, this strategy can make you passive income with low risk, if you do it right. Got questions? Drop them in the comments below. Like this video if you learned something new. And don't forget to subscribe for more money-making crypto content. Thanks for watching. And remember, in crypto, knowledge is profit. See you in the next video.